The bulls grind higher. Are they ready to break out? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market was kind of sloppy and we had a few different options. We were looking for the market to push up in a potential wave 2 or wave B, and that's pretty much what we saw as the bulls grinded higher throughout the day. Now the question is, can they break out over resistance? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with this push higher, we are starting to enter the resistance zone for the bears. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, and I understand that some of you were a little confused yesterday or worried that I had too many alt counts, things like that. And there are just times in the market where the count is sloppy and overlapping, and other people will just wave slap and throw things on there and tell you what it is. And I actually try to break it down in the way that is what I consider most accurate and what's most likely going to happen. And sometimes there are points in the market where I can't give you that most accurate information because we're in between a couple of things. We're in this range, this no man's land, and until we get out of that and get a little more of a clue, we have to kind of understand what all the options are. Not every wave is tradable or should be tradable. You should be waiting for setups to trade. And everything I say on these videos isn't meant to be I'm trading that. It's meant to be what I think the most likely path is. So if you're confused, I'm going to try to make it simpler today so that you kind of understand what we're looking for. So off of the high, we got the move down. They failed to make 5 waves. If somebody's counting this big long move down as a wave 5, that is much too long for a wave 5. And way too extended. So I can't count this as a wave 5 for a wave 1 down. It just doesn't fit. So overall, it does look like we have 3 waves to the downside. So for an impulsive move, you need 5 waves. And one of the rules is wave 4, this circle, can't go into wave 1 territory, this circle here, which it did, and still be impulsive. So we can't be impulsive to the downside. The other rule is that on diagonals, or not rule, but the other thing is that on diagonals, wave 4s do enter wave 1 territory. So for the bears to stay alive, we would be looking for a 5th wave to the downside that breaks this low. Okay? So that is why we still have a bear count to the downside. Yes, they broke the pivot, but that doesn't mean that the bear count is over until it actually is. So we have 3 options that we're tracking, and the first option is that we have an A wave down, potentially all of a B wave up. They could still push a little higher in B, but potentially all of a B wave up, and we made a wave 1 of C down, and we're bouncing in wave 2 of C. Now this bounce is very corrective. It's all 3 waves. It's overlapping. It's pretty ugly, so you would expect this B wave high to hold. And then we look for them to hit the resistance zone they're hitting right now, which was 44.25 really, but 44.40 to 44.57. We'd look for them to hold that area and come down and break the low. Okay, so if they break the low, we have 2 options. The first option is they stop at about 42.80. If they stop at 42.80 and start going higher, then that diagonal looks like we have this 5th wave down, and we'd look for a very sharp retrace back toward the 45.50 area. If they move down and they break 42.80 and they continue strongly to the downside towards 4,200, then it starts to look like a wave C down, and 4,200 becomes a must-hold for the bulls. Okay, so all we're really concerned about is can they break this low? And if they do, how deep do they go? 4,280 is more bearish, 4,200 is more bullish, which is a little counterintuitive, but that's because this would be an ABC and the other one would be a leading diagonal to the downside. Okay, so the downside just has 2 options. If they break the low, if they can hold and come back, first they got to break the wave 1 low, obviously. But if they break the low on the way back down, it has 2 options. Stop around 4,300 to 4,280 and come back up sharply. That would be the diagonal. Or push on down to 4,200. If they push to the upside and they continue to push here, it's pretty ugly, so I don't really have a lot of faith in this count. But if they continue to push up and they break through 44.60, okay, that's a strong warning to the bears that they're going to come try to take out this B wave high. And if they push higher, they can push as high as 45.50 and still come back down. However, given how deep they came on this A wave, I would expect them to continue to try to push in a set where they come up and challenge this high, maybe get just above it or fail right below it, pull back, and then break out to the upside. Okay? So there's really only two things we're watching. Can they break the low? Can they break the high? Those are the key levels. If they do, what happens next? And that's it. So when they break the high, if they can get past 45.53, then 4,800 becomes a real target real quick. If they can break the low and they can get down to 42.80 and stop, well, then the bears have control of the market. If they continue on down, the bulls have control. So that's what we're looking at on the ES. Over on the NASDAQ, we have a little bit different of a count, and it is a little bit weaker than the ES in terms of how far it has retraced its move down. So this move down out of the blue box was very sharp and deep, and they have not come up nearly as high as the ES, which is almost to the 618 or just above the 618 area and 764 area, where NASDAQ is just now hitting the 50% retrace. So if they're going to move higher, NASDAQ's going to have a catch-up day where it's getting 1.5 to 2% gains, where ES is only getting a 1.25% gain, something like that. But in any case, NASDAQ counts a little bit different. It can be the ABC we talked about on ES, but that does target right around 14,000. And that 14,000 level must hold for the bulls, or it gets real ugly to the downside. So if they break the low, that's what we'd be looking for. But if they come down, okay, and you get a move down, and then a bounce, and then a breakdown, that's going to be more likely a wave 3, where this move down in 5 was wave 1, the bounce in the blue box was wave 2, and then you get a 1 of 3, 2 of 3. So that is the setup that you would look for on the NASDAQ. Very often when the market is going to give you a C wave, it will just give you 1, 2, and then blow through the downside. And if it doesn't give you the 1, 2 of 3 setup, then more often than not, it's a C wave instead of wave 3. So there's a little tip for you as you're looking at waves, trying to understand what you're looking at. If it comes down in wave 1 of 3 and gives you a bounce like this, holds under wave 2, and then proceeds to melt down, that's going to be more likely a wave 3. If it comes down like this, where you have 1, 2, and then it's just gone, that's more likely a C wave that would be towards 14,000, okay? So breaking the low here at wave 1 and then this A wave or wave 1 low down here would give us an indication that we're starting down in either 3 or C. Back above this high could be a little higher of a wave 2. We would count this as a wave B or a wave 2. They push up higher in the blue box, up to all the way up to the 15.7 area. We could still consider that a wave 2, but given the overall move down off of this high right here, I would consider a move back over that high to be pretty bullish and look for them to maybe break through this box up toward the 16.5 to 17,000 region. So again, two things is all we're watching. Yes, there's a lot of things that can happen, but the only things you need to concern yourself with are, can we break this low from last week at around 14,790 or so, or 739, I'm sorry, and then if they do, we would look for them to break this low and then move on down towards 14,000 or lower, depending on if we get that wave 3 setup or wave C setup. Can they break the high? And if they do, can they push over this 15,700 area and through this blue box? And if they do, then we're looking at 16.5 to 17,000 and then a pullback and then 19,000 after that. So the NASDAQ has the high and low of last week. The ES has the high and low of last week. Those are the key levels. Those are what matter. After that, we start to look at what happens next. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners course. It is helping traders fully understand the market, what key levels are, how to trade off of them, how to understand why the market moves opposite the news, why we get good news and the market goes down or bad news and the market goes up. It helps them truly understand the emotion, sentiment, and price action of the market. As you can see from the testimonials on the screen, it's helping real traders make real money. It's 25 videos where I go through 3 different parts. The introduction, where we go through the expectations, your mindset, how to keep it simple, and why it works. The chart setup and tools, showing you what tool you need to use in conjunction with Elliott Wave Theory to confirm your tops, bottoms, turns, failures, all that kind of stuff. And finally, the Elliott Wave for Beginners area, where I go through each wave, how they work, and some other different things you need to know to get a full understanding of this complex material in a nice, easy to understand way. It's helping traders understand the market, and I'd love it to help you too. The really cool thing is it's included in both of our rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as that training material you just saw. We go over the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a cheap price and gets you these big multiples on your money, and it's how he structures his trades that's so unique. Something you really have to see to understand, and that's another reason he gives you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. We are looking at last week's high and low. If they can break out over the high, that would be pretty bullish, and we would look for them to push over 45.50 to give us a confirmation we're on our way toward that 4,800 level. If, however, they come down and break down below the low, then it depends on how far we break down. If they get into the 4,280 to 4,300 zone, it does look more like the diagonal to the downside with a downside follow-through. And if it gets past that toward the 4,200, then it's the C wave, and we would look for a pretty sharp retrace or bounce from there. Over on the NASDAQ, same situation. We're looking at last week's high and last week's low. If they can break out over the high and then 15,700, it does look more like we're going to head toward that 16,500 range. If they can break down below the low, then we would be looking at either a potential C wave towards 14,000 or a wave 3 much lower than that. Guys, that is the market update for today. I'll talk to you tomorrow.